Folks, if you saw Anna and I's second conversation, we really highlighted some pain that is coming. I actually highlighted that the pain will even be higher than I expected, and I expected a lot. But where there is great pain, there is great opportunity. Don't look at the tree of fear, look at the forest of opportunity. It's actually a shirt that I have because it's so cool. But Anna, we got to talk about the opportunity coming. What do you think?
Yes, I'm excited about opportunity coming. I've been patiently awaiting opportunity coming, and it's really
Too.
difficult to be patient in markets that are taking a long time to finish
Yeah.
correcting, right? But at the bottom and at the end of market cycles, when you're hitting the bottom and nearing recession, it's tremendous fear. Everything on the news is negative, but that's the time when the resilient make a lot of money because you're going to see more opportunity than what you've seen in probably 15 years, probably since 2009, 2010, after the Great Recession and early during the pandemic when people, those with the wherewithal and intestinal fortitude to keep investing did really, really well. So I'm definitely nervous about the trees, in front
Mhm.
of us. And
Sure.
we have to be very careful taking on risk because risk has increased. But if we can mitigate risks and understand the forest and the opportunity and what happens in market cycles and the fact that they will come back up, and this is a time of tremendous opportunity, we can really make a lot of money and help out a lot of people during a time that's otherwise frightening in the economy.
Yeah, what I want to do here first is I want to talk about our individual portfolios, right? Just our stuff, not the
Sure.
bigger things that we're a part of. When you look at what's potentially in front of you, and again, nobody's crystal ball is perfect, but when you look at what's in front of you, do you think this might or maybe even will be the biggest opportunity of your investing career, right? You've been through the dot com, you've been through the Great Recession, you're now financially free and retired. But what we are about to go through be the biggest opportunity for your personal portfolio? What do you think?
It definitely could be. My big opportunity after the last major, crash, economic crash, the Great Recession in 2009, was that properties were at rock bottom prices. And so I was able to really start scooping up a lot very, very inexpensively with rates that were higher than what we've seen over the last several years, but they started to trick lower. I didn't have any money. And so my opportunity was like, let's go in and learn something new and take advantage of being able to find cheap properties and then figure out how to take them down. Now we're on the other side of that where we've created wealth and we've got money and we've got the experience to be able to get through the next challenge, which is the banking and credit crisis, which we talked about in the last video, where bankers are really tightening up and going to be lending on quality assets and quality markets with quality experienced operators. So if you have experience and you have, some financial wherewithal, you're going to be bankable at the same time that you're going to see some property values falling. And so being able to find good properties below basis, below historic basis, and still be able to get quality loans is a very huge opportunity for me that I really didn't have, frankly, in 2009 because I was such poor credit quality at that time, having worked for AIG and my job being on the line and losing 401k and having a lot of debt. So personally, I'm in
Mhm.
a much better position than I was before. But even if you're not, even if you're starting out now like I was in 2009, it's going to be very, very similar in that you are going to have more opportunity for prices to fall relative to where they've been over the last year and a half, generally speaking, right? And in certain areas, especially. But you've also got a lot of people that have money that want to invest with you. And so if you can start out and find money partners who are credit worthy, even if you're starting out, you can get great deals or work through some seller financing deals for people that, can't afford to drop their price, but they can finance you really, really inexpensively. There's tremendous opportunity to be able to grow your portfolio today.
Yeah, when I look at what's in front of Olivia and I, we've done, we've done okay. But I really think that the next 2 years, maybe even 2.5 years, will give us the opportunity to take down the largest building. And as I sit here today and I see the commercial segment being worse than I expected, we might take down two of the largest buildings we've ever done. And again, I've worked directly with commercial banks small regional banks in my market in the last crisis, right? We've been doing this together 20 plus years, you and I. So we have history. We're known buyers. We're known entities. Again, I had a bank president one time call me and say, hey, you want the building next door? Things like that are going to happen again. So yeah, I think what's in front of us, if Olivia and I choose to go hard again, which again, I don't know, it's sad to say we don't have to. But yeah, I think there's every chance that we get the biggest, if not the two biggest properties we've ever had. And if things go really crazy, one thing I'm starting to actively play with is, what single family home should I sell and 1031 into some big apartments, right? We went from 8 to 80 in the last crisis. I mean, what could we do this time? So, for us individually, I think it's going to be the biggest opportunity going forward. But if we step back and talk about the individuals, I think you're right. The first thing I will say, you can feel free to disagree, is this is not the housing. This is not a residential problem. It's just not. The crash bros are just flat out wrong. But it's in the commercial segment. And oh, by the way, there will be opportunities, seller financing. There will be opportunities to step into deals. There will be opportunities to raise JVs or other deals. You just have to get creative and think different. One thing I'm doing, because I speak my truth, is I'm spending some money. Olivia and I are going to Jonathan Twombly's event in Vegas in late April, because there's stuff we don't know. I don't play in your space. I've never done your thing.
Right.
So I'm going to go spend a couple of grand and see if I can't pick something up. So I'm ecstatic. I'm excited for us individually, but there's just so much. The forest of, I don't see the tree of fear. It doesn't exist to me. The forest of opportunity with what's coming. I'm excited. I know there's some LPs that are going to get crushed. I tried to warn you, but Anna, I'm wildly excited about what's coming.
The reason that you don't see the tree of fear, you see it. You're just no longer as afraid of it, right?
Oh, it's not there. It doesn't exist. It doesn't exist.
Don't say that. Now, those of you that just heard Michael, don't run out and ignore risk and ignore fear.
No, I spent 22 years looking through it.
That's why I'm saying,
thank you.
You really see it, but it doesn't make you afraid, and you just go right around it. And you're looking
tree
for opportunity
in the forest. I'll say it that way.
Okay,
I step back because if you ever get the shirt, it's really cool. I had I wish I knew who drew it for me. There was a follower that drew it. It was awesome. There's a tree in the middle and it's crystal clear. But if you step back, it morphs into the forest. So yes, the tree of fear is there. To me, after 22 years of daily discipline, looking at it, networking, growing, I don't see it in the forest. It's there. I know it's there. But there's all these other
You're looking
trees.
beyond it. Right. And really, anyone that wants to be an investor has to have that mindset that there's always risk, and there's always going to be different risks and new risks. And so those things can be scary because we don't know how to deal with them. We haven't seen them before. But you do start to develop as you go through experience, and you tackle fear, and you have hurdles, and you do things you never thought you could get through, and you come out on the other side. You become wiser, you become more resilient, and you start to no longer fear the things that can create fear to other people. You say, I know how to mitigate this. This is an issue, but I see all this other things, and we're going to balance these fears so that we're not paralyzed by inaction because of the fear. But we say, let's name it. Let's decide how we're going to defeat it. And now we go for the opportunity, knowing, very well what the risk is. But if you don't have that mindset that you're going to overcome fear, mitigate risk, and continue to take risk, you'll never grow wealth. I mean, part of growing wealth is taking risks that we understand, controlling them as best we can, and then seeking, returns that are commensurate or better than the risk that we're taking for those things. So like you, I see tremendous opportunity. Also in the commercial real estate space, if you can find deals that are quality deals in quality markets, but they just got caught in this, not knowing what was going to happen, right? There are a lot of quality deals with quality operators, but who bought deals at the wrong time with the wrong type of debt, and are going to need to get out of those things. And I will tell you this, a lot of loans, commercial real estate, especially multifamily, Michael, they have assumable rate loans and they have interest
Yes,
only loans for
they
years. So
do.
we're actively writing offers. We had two big LOIs that we were close, but we didn't end up penciling, the number that they wanted. But essentially, they were loan assumptions with 5 to 7 years left at sub 4% interest only rates, but quality assets and quality markets. And so, if you can find distress without it being a distressed market or a distressed property, there's huge opportunity to do really, really well. So, I'm looking to grow my personal portfolio as
Yeah.
well, with quality assets and quality markets. And to me, that's the name of the game. You buy great assets and great markets, and you're going to weather these ups and downs. But it's usually the debt on the commercial that makes them distressed. It's not that the property itself has a problem or that it's really a
It's the
bad
debt.
property.
It's
It's
always
the
the
fact
debt.
that your residential space, you get those quality 30-year loans, right? I only have them on vacation rentals. I don't have 30-year fixed rates on anything else, because my commercial stuff,
Yeah.
you get a rate and it resets every couple of years. And so that's
Yeah.
where there's huge opportunity. Look for properties that have assumable rate loans on big multifamily, or people that have a great asset, but they just can't get out of the type of loan that they're in. And there's tremendous opportunity. But like you said, last thing to just kind of hammer
Mhm.
home, like you always say, do great deals. This is not the time to do mediocre deals, because the market still has pain ahead. If you're
Agreed.
buying something you think is a slam dunk today, great, but it has to be a slam dunk today,
Right.
because the real pain isn't here yet.
Yeah, I would say again, I loved your example of trying to again, you and I do the work all the time. You're trying to write deals today, you're trying to do assumptions. I would tell you, my opinion, we're in the first or second inning. So the
Yeah.
discipline that you have now and not doing those deals because they don't pencil, A, they may come back in the fifth inning, right? Nobody else bought them.
Yes.
We'll come back. And there'll be a lot more deals in the sixth, seventh, and eighth inning of this, because this is a
Yes.
this is not an event. It's not a moment.
Yeah.
Commercial properties are big. There's extend and pretend. There's loan workouts. There's all this stuff, but
Yeah.
eventually they all break and
I
opportunities will be
love
there.
that baseball analogy. As y'all know, I love baseball. I went to the World Series twice this last year, but it does feel a lot like baseball, because baseball can be very boring between the action, right?
Yeah.
There's long innings that you could go scoreless, for 7 innings, and then all of a sudden, it can go 15 or 16 innings if things get really
Mhm.
exciting. And so this has felt like, this is slow, and come on, where's the crash? I'm ready for the opportunity, right?
Yeah.
But it's been a slow decline, and oftentimes they really are. We don't see them that often. We don't see true
Oh,
cyclical declines like this. They're lasting longer and longer between. So we're just so used to, something feels painful, it's back, and it's just fine.
yeah.
But it usually is about a 2-year process. If you look back to 2009, the pain really started at the end of 2006 and
Yeah.
early 2007, when some people were warning, hey, there's going to be pain, but then people quit believing it, right?
Yeah.
So I think we have to realize this is early on. Be patient, do the work, know your buy box, like you say all the time, Michael, and only do great, great deals. There's still great opportunity to come. We're just at the beginning.
Yeah, just at the beginning. Anna, where can people find you?
You can find me here every week on my playlist on your channel. You can find me on social media at Anna Kelly, REI Mom. You can find me at greaterpurposecapital.com if you're an accredited investor looking for passive investments.
Thank you so much.